What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we did see the indices climbing higher, with the exception of the Nasdaq 100, which took a day to cool down. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were up 0.31%, and we did get a price action breakout and close above that resistance level at 453. Now we're only about 20 cents above that level, and if I switch this over to a 5-minute chart, you can see that most of those gains were actually in the last 10 minutes of the market. There was a lot of volume and buying near the close in that last 10 minutes. So the question is this just going to be a bull trap, or is that the real deal rally near the end of the day? So only time will tell if this breakout is the real deal, but don't forget that I always tell you want to see 2 price action closes above a critical resistance. So without a doubt, 453 is a very critical resistance level, so wait for that second day confirmation above that level. Another thing I want to talk about is at these levels, we do have price targets that could take us up to about 461 and potentially even higher. So if we measure from today's close up to that price target, that's about 1.7% to the upside. To the downside from today's close to close the gap below is about a 2% downside. So we are getting at very risky levels, and I always tell you that the higher the stock market goes, the more risky it becomes. If you're buying SPY at these levels, you're taking on more risk than any other market participants have ever taken on in history. SPY has never been at these levels, so without a doubt, by definition, this is one of the riskiest markets that the stock market has ever seen. I know it's very easy to think that the stock market just goes up forever because it has been a very strong bull rally, but I can't stress it enough that the stock market does not only go up despite popular belief. So at these levels, hear it from me first that these are very risky levels and you need to be cautious. So as we continue to climb higher, I still want you to stay objective and follow the price action in the trend, because without a doubt, that is the only way you're going to navigate this market correctly. We still have price action well above all the moving averages, and we still do have a strong bull trend, but now is not the time to be taking on a ton of risk. So stay bullish, but just don't be taking on any excessive risk. I'm not trying to tell you the stock market cannot go higher. It very likely will continue to go higher, but stay objective and just be cautious. At these levels right now, you need to look for support at 453, 451, and 449. The critical support level is still down here at 446, and we need to see the S&P 500 closing below that critical support to see the stock market roll over and possibly see a correction. So remember, below 446, it's likely we'll close that gap, and then we could continue to go lower, possibly down to the 50 EMA. But as long as the price action is above 446 and we have the full bull trend, there's no reason to believe that this market can't go higher. Above 453, we could start climbing to 457 and 461. On the Nasdaq 100 triple Qs, we took a day to cool down after hitting that resistance at 382 yet again. So 382 is without a doubt a critical resistance on the triple Qs. We were down 0.05% and we did find support at the 5 EMA. So the price action is still bullish above all the moving averages, and we still do have the very strong bull trend. From today's close to the price target above at 388 is about another 2% to the upside. And from today's close to close the gap at 368 is just over 3% downside. So just like with the S&P 500, the Nasdaq 100 could be coming into critical resistance just 2% higher. And from today's level, we could drop about 3% to close the gap. So know your risk reward at these levels and understand the higher we go, the riskier this market gets. As long as the price action is above all the moving averages and you still have the strong bull trend, stay bullish, but watch that resistance at 382 and don't look ahead until we get a breakout. We need to break out above 382 to get to 388, so watch 382 and forget about 388 for the time being. The critical support levels to watch on the Nasdaq 100 triple Qs are 376, and our 20 simple moving average is now just above 371. So we need to see the triple Qs getting below 371 to see it starting to roll over, and right now we just don't see price action that tells us we're going that low. Things can change at the drop of a hat, so stay objective and watch the price action at these levels. On the Dow Jones, we were up 0.37% today, and we're getting very close to that resistance level above at 355. We still have bullish price action with the bullish trend, and the critical support level is at 353. Watch resistance above at 355, 356.5, and then 359 above that. To the downside, you're looking for a rollover look below 353 and the potential to close the gap at 351.7 and support at 351 and the 50 EMA at 350. So the Dow Jones is getting very tight in this range, and there's a lot of support and resistance just a few dollars away from each other. You could see the trading range is very narrow and the Bollinger Bands are very tight, which does mean the Dow Jones could be squeezing. Usually after a squeeze, you will get a big move and you don't know the direction, so you still have to follow the price action. On the Russell 2000, we were up 0.69% today and we're getting very close to that next resistance level at 230. We're very close to having the full bull trend yet again if that 20 simple moving average can cross back over the 50 EMA. So if we can break out above 230, look for resistance at 233 and the previous all-time highs around 234. If we regain the full bull trend, the Russell 2000 will be looking extremely bullish and we could see a bullish breakout to brand new all-time highs. To the downside, watch support at 227, 224, and 222, and below 222, it will look like the Russell is rolling over. On the Arkk ETF, we were up 0.9% today and we're getting very close to that resistance level at 125.6. If we do get a bullish breakout, look for resistance at 128 and 131. To the downside, we have support at 122.7 and the strong support level at 120, but do note that the 20 simple moving average is officially below the 50 EMA, so while Arkk looks like it is going into a full bull trend, we don't have the official confirmation from the 20 crossing above the 50. This isn't that big of a deal because the 20 simple moving average should be crossing back over in the very near future, so as long as Arkk is staying above critical support at 120, you can remain bullish on Arkk. Below 120, look for the gap close at 116. On the VIX, we did get a little bit of a warning sign with the VIX going up 1.86%. On the same day, we see the S&P 500 going higher as well. Normally when the S&P 500 goes higher, we want to see the VIX going lower, and we are seeing the VIX bouncing off of the support trend line after we did close the gap at 15.7. So if you've been following along with my VIX analysis, you know that I've been watching for this, because if we see the VIX spiking off of support, that could be a very early warning sign that we are due for a stock market pullback, which could always lead to a correction. So if we see the VIX spiking above 18.2 and then getting above 20, that could be a volatile pullback or sector rotation. And if we see the VIX getting above 23, look for a stock market correction. So for the time being, we're seeing the VIX forming a higher low, and that does mean that the possibility of volatility coming back into this market is still there, and we definitely see a warning sign with the VIX going up the same day the S&P 500 is. So was that last 10-minute buying in the S&P 500 just a shenanigan before we see a massive sell-off? Only time will tell, and the VIX will give you a lot of that important information you need to know. Now, if you see the VIX breaking below the support trend line and heading down towards 14, that will go hand in hand with brand new all-time highs, and that will be a bullish development, so watch for that as well. On Bitcoin, we're currently up about 1.5%, and we do have the price action back above all the moving averages, and we are holding on to the full bull trend. Remember, Bitcoin needs to break out above my price target at 51,000 to start running to the next price targets, which are all the way up there at 60,000. Remember, if Bitcoin breaks out above 51,000, it could form brand new all-time highs this year, so that will be a very bullish breakthrough. As long as we have the full bull trend, look for higher prices. To the downside, we have support at the 20 simple moving average at 48,000 and support levels at 45,000 and 43,000 and the 50 EMA, which is right around 44,000. On Amazon, we were down about 0.5% today, and we see Amazon getting rejected at that $3,500 resistance level yet again. There's still just a little bit of gap to fill above at 35.80, but that gap is not going to fill if Amazon can't break above 3,500. Above 3,500, we still have resistance at 35.20, which is our resistance trend line, and our 35.52 resistance level. To the downside, look for strong support at 3,400, and below that, we're looking for support at 33.11. Amazon is starting to look bullish, but we don't have the confirmation of the full bull trend, even though we do have the bullish price action that tells us this is not just a dead cat bounce. We're going down on decreasing volume, which is always bullish because you want to go down on low volume and you want to break out on high volume. So right now, Amazon still looks bullish, but it could easily come back down to 3,400 or 33.11 before going any higher. On Tesla stock, we were down about 0.25% today, closing right on top of support at 732. We still have the full bull trend and we're still sitting on a support level, so that does mean Tesla could continue to climb higher, and our next price target is at 765. If we break support at 732, look for support at 714.5 and the 20 simple moving average at 707. Below that, we could still have strong support at 692, which would still be a higher low and would keep Tesla in this bull market. On Apple stock, we were up 0.75% today, and we still see Apple climbing that upper Bollinger Band as those upper Bollinger Bands expand. Remember, the price target on Apple is just above at 156, so now is not the time to be getting greedy on this stock. It's very possible we see Apple getting rejected at that price target, and we're very close to getting there, so watch for that as a strong resistance level. To the downside, we have support at 151 and our 20 simple moving average at 149, and below that we could come back down to the 50 EMA at 145, and below that we could close the gap at 137. So Apple's still in the full bull trend with bullish price action, so it looks like we should have no trouble getting to that price target. Just watch what happens after we get there, because if we see a sharp pullback, that could be a signal that the rest of the market is due for a pullback as well. On the financial sector, we were up 0.34% today, closing just above the 20 simple moving average, but we did lose the full bull trend today. The 13 EMA has crossed below the 20, so watch for a potential pullback to the 50 EMA. On the industrial sector, we were up over 1% today with bullish price action and still holding on to the full bull trend. The healthcare sector was up over 1% today with a strong bounce off of the 20 simple moving average and holding on to the full bull trend. The energy sector was up 2.5% today, closing back above 3 of our 4 moving averages. If the energy sector can close back over the 50 EMA, we could lose the bear trend and possibly even go into a bull market. So jumping back over to the S&P 500, it definitely looks like this market is still bullish, but I still want you to be cautious as we climb to new all-time highs. These levels are getting up there in the clouds, and it's very possible we could see a stock market correction after we get to one of these levels. So please be cautious and understand the stock market takes the stairs up and the elevator down. It's very possible that we could give back all of these gains in just a short few days. So if you're over leveraging or you're just taking on way too much risk, you just need to know that now is not the time to be doing that. You want to buy low and sell high, and we're definitely high, so you should be doing more selling than buying at these levels. I'm not trying to scare you out of the market, and I always suggest leaving some skin in the game in a bull market, so make sure that you don't just go all cash or try to short this bull market just because I'm trying to tell you to be cautious. There's a big difference between being cautious and being reckless and trying to short a bull market. So continue to watch the price action and watch these support and resistance levels, and make sure you understand that we are still in a very strong bull trend and these bull markets do not die easily. I'm not calling for a rug pull or anything violent to the downside. I just want you to be cautious at these levels and prepare for any scenario. It's always better to prepare for the worst and hope for the best than be caught off guard and lose a ton of money on a small move to the downside because you're over leveraged. Also remember that I have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and it does very well in all market conditions. I'm currently running a 50% off promotion code for your first month, so now is the best time to try out BANC Trade Alerts. You can find out all of the details and how to join in the links in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description of the video. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.